Welcome back, fellow traders. It's time for another exciting episode of our weekly YouTube video where we dive deep into the charts and explore the upcoming week's potential market movers. Now, there's a recent twist in the tale of US economy. The consumer price index has hit a staggering 3.5% on year-to-year basis, leaving hopes of immediate rate cuts in the dust, and this has sparked a frenzy in the currency markets, causing US dollar to soar on Friday. Now, here's $1 million question. How will this shocking CPI acceleration impact other currencies and, more importantly, our beloved gold? Will it send shockwaves through the market, or will there be an unexpected winner amidst the chaos? So, without wasting much time, let's move directly to the charts. So here's the weekly analysis, and we are on tradingview.com to understand the charts. So without wasting much time, this time I'm not recording the technical analysis for dollar index. Without any doubt, dollar index remains bullish, at least in the short term. So let's start from EURCHF. So this is our first currency pair, and I'm turning my chart into a line chart, starting from daily time frame and clearing all my existing drawings. So here, based on my daily chart, in fact, I'll quickly move on to weekly and let's understand what's happening on the weekly time frame for EURCHF. Now, based on the weekly chart, if you notice, we have a high here followed by sequential lower highs. Then this is a major one here and followed by lower highs, another lower high, and at the same time we have a sequence of lower lows. So first low marked, next lower low, followed by a major one here, then we have another lower low, and now the price moves into this cycle and lower low followed by lower low. Now if you notice, we have it built bullish divergence long ago because it's a weekly chart, but it failed to create a higher high, so BOS was not done. Now started from this high, we have a new sequence of lower highs. I missed one in between. I'm going to fill it here. So here we have a major lower high. Now I'm just going to zoom in and I'll focus on the latest downward trend. So starting from this high, we have a sequence of lower lows and lower highs. Now if you notice, we got bullish divergence between the latest lower lows, and because of this bullish divergence we are expecting a bullish behavior of this instrument. Now based on weekly bullish divergence, I need to mark the BOS point. So we need buyers to break this resistance and create a new higher high on the weekly time chart. Now let's quickly move to daily. Now on daily time frame, if you notice, we had the sequence of lower lows followed by bullish divergence on histogram, and this time the BOS is already done. So here on daily time frame, this is the BOS level. So the buyers have created a new higher high after this L1 L2 bullish divergence. Now we have a sequence of high, higher high, higher high and higher high, followed by higher lows and higher lows. So on weekly chart we found bullish divergence, on daily chart we found bullish divergence followed by breaker structure and higher high pattern. So the chart becomes bullish on daily time frame. Now if you move to the next lower time frame, that is 4H. Now based on 4 hourly chart, it has also printed higher highs with a sequence of higher highs. Give me a sec. Here. So here we have a sequence of higher highs with bearish divergence. So which means the first bullish wave is completed with bearish divergence and it's time for the short-term pullback. So we are expecting short-term pullback. Now based on the wave count, this seems to be the first wave followed by corrective second wave. We have the longest third wave, corrective fourth wave, and the fifth wave is done here, and we can expect short-term bearish behavior of EURCHF. Now I'm going to mark fib extension starting from the lowest point, connecting to the first high and the first higher low. Now if you notice, it has not completed the bullish cycle because this bullish run has taken this instrument to the fib extension level of 2.61. In fact, it remained short of 2.61. It did not touch this area of 2.61, and it has formed bearish divergence, due to which there is a bearish pressure now. And if you want to mark the bearish BOS, here is the point of bearish BOS, this one. So this is our bearish BOS level, and the bears have already crossed. So we have bearish divergence between the last two highs followed by BOS, and we can expect a short-term pullback. And on this pullback, the plan is to join the sellers. So in the short run, EURCHF turns bearish, and I can expect correction up to at least this level, so 0.9538. So this is fib extension 100% level, and the seller should take the price back to 100% fib extension area, and from there we can expect a resumption of the new bullish wave. So short-term plan for EURCHF remains bearish, and EURCHF is also inversely correlated with the US dollar. So when dollar gets stronger, EURCHF moves lower. Now based on 1 hourly chart, if you notice, we have completed higher high formation with bearish divergence coming into play. First wave down, second corrective wave up. It has printed longest third wave. Now it's time for corrective wave number 4 in the downward direction. So the plan is, I'm counting the waves in the downward direction. It may get back to the falling trend line and then resume its downward journey. So we can expect to make money by selling on the rise. So I'm anticipating to enter into the short position somewhere here, which is a confluence of resistance here. So we can expect that let it correct in the upward direction, and here I'm going to join the falling trend line. So once this upside correction is done, we should enter into a sell trade, and we can expect FE 100% of the bullish run. So I'm going to mark my target here. This is our first target, and this could be our major target. Now we can also move our stop loss a bit higher. Now the invalidation would be if we get a break above this level. So we should always keep in mind that we should have an exit plan as well. So in case the buyers, they take back the control of this instrument, so a break above 0.9841 should be taken as invalidation. Otherwise, we should plan to sell on the rise and collect profit somewhere around 0.9525 or 20. Now moving to the next currency pair, that's pound dollar. Now again, based on higher time frame analysis starting from the weekly, we can expect that it has already completed first wave up, second wave up with bearish divergence, and after this bearish divergence, now we got a lower high formation. So here I'm talking about divergence coming into play, and then we got high and lower high. So we can easily mark fib extension in the downward direction to understand the downward targets for pound dollar. So I'm going to pick fib extension. I'll start from this high, connect to the first low formed, and now I'll connect to the lower high. So the first target is fib extension 0.618, and I've marked our target with a red box here. Now removing the fib extension and moving back to daily time frame. Now based on daily time frame, we got a new bearish divergence formation in this corrective leg. So we got the series of higher highs with lower high, and we also got the BS. So breakout structure is done. We can expect the pullback, and all pullbacks should be taken as an opportunity to sell and collect your first profit around this area. So that is around 1.2200, or we can also say quarter number 1.2250. Now let's check what's happening on the lower time frame, that is 4H. On 4H, I can see that we have a sequence of lower highs. We have high followed by lower high, lower high. We have lows, lower lows, and lower lows. And this is the new low being printed. It is not yet done, and I do not see any sign against the sellers. I do not see bullish divergence coming into play, so which means that there is more in the downward direction for pound dollar. So I'm expecting that this bearish run will run at least towards the quarter number, that is 1.2250. So that is my immediate next target for pound dollar. The plan remains bearish, and the invalidation could be break above this trend line, or you can also create another invalidation horizontal level by marking a horizontal line on this high. So a break above 1.2698, a closure above 1.2698, in round number we can say 1.2700 should be taken as a invalidation in the sell plan. Otherwise, it should run directly towards 1.2250. In between, if you see any pullbacks, should be taken as an opportunity to sell. So the plan is sell on the rise. Now moving to 1 hourly chart, I can see that on 1 hourly chart, there are some signs that it may develop bullish divergence, which should send this currency pair back for the correction and should be taken as an opportunity to sell only. So pound dollar remains bearish in the short term without any doubt. And since US dollar is getting stronger, so the next currency pair in line is USDCAD, and the plan is to buy on the dip. So here again, I'm going on the higher time frame chart. I'm just cleaning all the existing drawings from my chart, and based on this higher time frame chart, if you notice, we got a double bottom formation here, and then the market starts printing a sequence of higher highs, higher lows, and around this area it seems like it has completed its third wave, and then market starts correcting itself. Now here we got the sideways consolidation, so it looks like a long-term consolidation pattern here. So I'm going to mark a parallel channel connecting the highs So after this massive bull run, this currency pair starts moving in the sideways direction. Now this is the mid level of the sideways channel, and recently USDCAD has formed another support precisely on the mid level here. Now moving to daily chart, if you notice, we do not have any signs against in the bullish direction. So we have higher high formation, we have higher high formation, we have higher high formation of MACD histogram and MACD lines as well. So there is no bearish divergence coming into play. So the plan remains bullish, and usually when the market is consolidating in the sideways channel, so the run is from boundary to boundary. So this is the lower boundary, and we can expect the run to be completed at the top of the boundary. So somewhere around 1.4400, or we can also expect 1.4500. So this is the ultimate target for dollar CAD in the longer run. Now let's apply fib extension. So I'm going to start from the lowest point at the parallel channel, connecting to the first high, and connecting to the higher low. Now, right now we are slightly short of 1.618 fib extension level, and the cycle should be completed at fib extension 200, so that is around 1.4188. Now if you notice that it bounced precisely from fib extension 100% after completing this correction, so our first target is at least fib extension 1.618. so this is the immediate next target, and this target would be completed somewhere around at 1.3825. Currently we are at 1.3768, so there is a probability of another 60 pips minimum in this currency pair. Now I'm going to mark one more extension on the recent most cycle. So here, this is the recent most bullish cycle. I'm going to pick from the lowest point. I'll connect to the first high and I'll connect to the first higher low, and I'll use a different color on this fib extension. And if you notice, the next 1.618 of the blue cycle is at 1.3949. And do we have a duplication zone? Yes, we do not have exact duplication, but we have two bullish cycles completing 200% mark somewhere at 1.4. So the first immediate target is 1.3825, followed by 1.4. That is again a psychological round figure number. And moving to 4-hourly chart, adjusting the view and going back to the line chart. Now if you see, we do not have any signs against. We have higher high formation, MACD lines are still open ended towards the upside, so no change in plan. This is clearly bullish. Now on a lower time frame basis, that is 1H, I've seen bearish divergence forming up. So this bearish divergence will bring some short-term weakness. So we have higher high formation. It may bring short-term weakness, but this short-term weakness should be taken as an opportunity to buy. And I've created a rising trend line here. If we get a proper retest on the pullback of the rising trend line, I will take it as an opportunity to buy and hold it for my first target at 1.3825, followed by 1.4000, the psychological round figure number. So this is the plan for USDCAD, which is bullish. Now moving to the next instrument is US oil or crude oil. Now cleaning my chart, this is my weekly chart. I'm going to mark fib retracement from the swing low formed during COVID time, and post-COVID we formed a new swing high. I'm connecting from the lowest to the highest. We got the retracement towards precisely towards 50% mark, and since then it is creating a sequence of higher highs and higher lows. So this is our weekly chart. If you notice, we got bullish divergence here and followed by high, higher high, higher low, and now we are again forming the sequence of higher lows. I do not see any slowdown on MACD histogram, at least on the weekly chart. Now if I want to understand the targets, I'm going to plot fib extension on this swing low, which is formed on fib retracement 50% mark, connecting to the first high and joining the first higher low. So the duplication zone. So right now we are precisely, crude oil price is exactly on fib extension 0.618. So our first target is achieved. So 86.88 is done. Now if it continues, which is most likely it is going to continue as per the technical setup on the charts, the next target is 98.96, or we can say we would be again running back towards $100 mark in crude oil. Now let's see what's happening on the lower time frame. Moving to daily, turning to a line chart, and if you notice, we have the sequence of low, higher low, higher low, higher low, higher low, and this is the major last higher low printed on the chart. We have a sequence of high, higher high, higher high, higher high and higher high. Now if you compare the last two consecutive highs, higher high formation on the chart, higher high formation on MACD histogram, higher high formation on MACD lines. So I do not see bearish divergence coming into play, which means there could be some short-term pullbacks, but ultimately the trend remains bullish. I can also plot a rising channel here connecting the two consecutive lows with the highs, and if you notice, the price has clearly broken the first rising channel and it has entered into the second rising channel, which is usually an acceleration channel for the trend, and we have reached exactly to the midpoint of the second rising channel. Now we can expect a short-term pullback and continuation to the upside. Now we can also plot a few more extension levels based on daily bullish cycle. So I'm connecting from the low to the first high and the first higher low, and I'm going to change the color of this extension. And if you notice, right now we had the confluence of the bigger time frame extension cycle 0.618 and the lower time frame bullish extension cycle 200%. So this was the magnetic level which is already achieved, and right now I can see some bearish formation on the last daily candle for crude oil, which means only in the short run we can expect some pullback, but the pullback should be taken as an opportunity to buy and look for the next target at the extension level of 2.61 of the current lower time frame bullish cycle. So the next immediate target would be 91.26 followed by 94.47, and ultimate target could be $100 or $99. I can also mark a rising trend line on the latest daily chart. So this is the rising trend line, which is quite steep, and usually steeper trend lines are not so reliable, so I'm not looking for selling crude oil until we get a break below this trend line. So until this trend line remains intact, there is no plan for selling. Now moving to next lower time frame, that is 4H. Now what's happening on 4-hourly chart? I do not see any bearish divergence coming into play. We have high and higher high. I could see short-term divergence here, and I can see some consolidation here because we have highs and lower highs and lower highs, and we also have a rising trend line here on 4-hourly chart, but I'm not going to clutter my chart with multiple rising trend lines. So I'm expecting that after high formation and a lower time frame bearish divergence coming into play, we can expect short-term correction. This could be a pullback towards the retest of the rising trend line which was formed on daily chart, or this could be just another consolidation. So crude oil may remain range bound for a while, maybe inside a triangular formation or maybe a deeper pullback for the retest of the rising trend line, but it will be always safer to go for the buy trade on the pullback. So buy the dips and aim for the next fib target derived from the fib extensions. Now finally, let's move to our favorite, gold. Now I've marked multiple extension cycles here, so I'm starting from monthly chart and I've plotted first fib extension cycle. So if you notice, I've started from the lowest, connected to the first high. Now this is based on candlesticks chart, so you can find some difference here based on a line chart, and connected to the first higher low. So these thicker horizontal lines are coming from this long-term bullish fib extension plotted on the bigger cycle. So the first major fib extension level is now surpassed, that is 2070, 2075. So we are way above the first fib extension barrier plotted on the long-term cycle. Now if you notice, I have also marked another fib extension cycle on the lower time frame. So after this major cycle was completed, I've connected from the 2015 low to the first high and first lower high, and this time I've taken the same color, but the horizontal lines are not as thick, they are thinner, and we got the 400% extension of this bullish wave exactly on the price of 2432. And on Friday, gold has precisely touched 2432 and bounced lower. So in my previous weekly forecast, I mentioned the expected immediate level for gold as 2427. So it has in fact touched the level of Feb extension 400%, that is 2432. So we were very close, and we could analyze in advance that gold is moving towards 2430, and it has done so. Now based on weekly chart, I do not see any signs of any signs against the buyers. I do not see any signs of slowing down. So I can see higher high formation on MACD histogram, higher high formation of MACD lines, and there is no weakness coming on the weekly chart. So the price action is still bullish, no bearish signs, and the gold chart remains bullish on the weekly chart, on the weekly time frame. Now coming down to daily. Now based on daily, I can see a slowdown being formed on histogram. So now we have high and higher high, followed by high and a lower high on MACD histogram, but there is no lower high formation on MACD lines. In fact, it has not even crossed in the bearish direction. So a bearish divergence is anticipated, it's expected, but it is not yet there. So I'm going to mark the new rising trend lines based on the daily time frame, and I'll just remove these existing ones. I'm going to use a trend line tool and connect to the higher lows, and we got a new rising trend line, the daily one. Now if we see a pullback because of this divergence, there could be some slowdown, there could be some short-term pullback in gold. You can expect it to come back towards the rising trend line and then continue if we get this pullback. Otherwise, you may expect gold to retest this area of confidence. So this is a very strong area, and this area is now expected to serve as support. So it ranges between 2274 to 2306. So we can just have a retest of this and continuation, second probability. And moving down to 4-hourly chart, let's understand what's happening on the 4-hourly chart. Yes, now we have bearish divergence, a clear bearish divergence formed on 4-hourly chart based on MACD lines, and a wider divergence formed on MACD histogram. Now for wider divergence, the lowest point to be broken by the sellers is around, and here we have, so that is around 2236. And for the narrow divergence between the last two highs, we do not have the BOS. So this BOS will be completed once we get a break below 2330 or 2329. So until gold remains above 2330, it can again create a double bottom here and bounce back. So do not get into a sell trade until you see a structure of lower highs or lower lows, or if you see the BS being completed, and then you can expect short-term pullback. And the pullback could be towards the region of 2202 to 2237. A shallow pullback could be towards 2274 to 2306, but ultimately I'm expecting continuation in the bullish direction because the higher time frame is clearly bullish. Now, cutting it short based on the duplication of higher time frame Fib extension cycles or the Fib extension levels, I'm expecting gold to touch the price of 2560 because this is the magnet zone. So we can expect some short-term pullback, retest, and then continuation towards 2560. So I'll be trading gold very cautiously at the opening of this week, because until now we just have bearish divergence formed on daily and 4 hourly chart. It has not yet formed a lower low or a lower high in sequence. So there is no plan for selling without the evidence on the charts. At the same time, I would like to buy on the dips for my longer term plan, and I'll be aiming 2560 as my ultimate target. So I hope I have added some value with my technical analysis video. If you still have any doubts, you can get back to me. Or if you want me to analyze any other instrument, feel free to DM me. Have a nice and profitable trading week ahead. Bye bye.